What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and has made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything. And it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick.
I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
good evening and welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give the answers about all things investing and trading. Now, last week was an exciting one on the market, so I'm sure you're all champing at the bit to find out about our thoughts on where things are headed. Now, again, we have an information-packed show lined up for you tonight, but that for some of you may be a little bit confronting as we'll challenge your thinking. Now, our goal as always is to educate people to be great traders, and sometimes that means giving praise when it's due, and at others it means, well, we need to give some people a reality check, if you actually know what I mean. Now, it's the second Tuesday in the month, and that means we get into giving you our thoughts on the sectors and indices in the Australian market. And right now, this is a perfect time for this, as we'll give you our thoughts on where they are all headed and where the opportunities will be. As always, we'll answer your questions and look at the stocks that you're interested in, give you our expert opinion, and a whole lot more. Hello, I'm Dale Gillham, Chief Analyst here at Wealth Within, and joining me tonight is Janine Cox, our Senior Analyst, and we're Australia's most trusted stock market educators.
Hi Dale, and thank you for that lovely introduction. The market was exciting last week, and look, it's good to see the ups and downs, isn't it, on our market?
Yeah, I think it was great. I mean, we did the show and the market had been up for Monday and Tuesday and everybody thought everything was nice, but we were telling everybody that it was going to fall away, and That's what happened.
It did. It actually listened to you, didn't it?
Well, it always does what I tell it to do, unlike a lot of other people around here. You. It does
not
actually,
mentioning any names.
Not mentioning any names, but no, it's the market's doing normal things. But it is interesting looking at people's comments coming through. You know, like I had one today, like somebody says, you know, when's the market crashing? And it's like, and I've been saying for months that the market's not going to crash. So if you're watching our videos and this live stream and you think the market's going to crash, I think I need to seriously have a chat with you because it's definitely not going to crash.
Yeah.
The US market's definitely not going to crash.
I mean, they've been saying that for a long time and it's just gone sideways, hasn't it?
Well, yeah, but the flip side is prior to the 2007 high, I think for what was it, 18 months or more, we were saying the high is coming, it's going to turn, we're going to have a big crash. Nobody believed us. Everybody thought that the market was just going to go up forever. And then
so you have to almost be contrarian to what the masses are thinking, don't you?
Yeah, and the thing is people weren't believing us. But then, you know, now when we say the market's not going to crash, people are going, oh, I don't believe you. But again, it's your money. You can lose it all you like. That's as fine if you keep making the wrong decisions. But really that contrarian view is really what we want to do. And
you don't have to worry if you've got proper rules in place anyway.
No, you don't, and that's the point. Is we talk about
really doesn't
let
matter
profits run, cut losses short.
Yeah, that's right.
That's what we always talk about, and to me, it's always as long as you're protecting the downside. Who cares about what happens with the upside? It's going to happen anyway. But as Buffett says, buying doom, selling boom. So if you're thinking it's doomy, time to buy.
Clap your hands.
and clap, most definitely clap your hands.
So before we move on, I need to welcome all the new people to the show. Thanks for joining us, and we hope you enjoy tonight's show. Now, if you have a burning question, then on the right is a chat box, so put your questions there and remember to be detailed, as this really helps us to help you. If your question is about a stock, then tell us what you think. Why are you looking at it? Do you own it or not? Moving on, it's the second Tuesday in the month, and as Dale said, that means we're going to have a good look at the indices and the sectors in the Australian market. So let's get into that now. So on my screen here, Dale, I mean, I've got the list of all the sectors, and you can see there on the right of that, there's a list showing the percentage movers. So that's the moves for the week.
That's for the week. So that's Monday and Tuesday, yesterday and today.
So far. And you can see there that the financials were at the bottom of the list, and then at the top of the list we've got energy. So no surprise, actually, energy and materials tend to sort of, work together at times, and then at other times they're apart. But notice how materials and financials are sort of neck and neck together.
Well, financials were down like 6 or 7% last week, something like that.
It's generally the main ones, isn't it? Like energy and healthcare are right up there, and materials and financials are down at the bottom. So they're the four big ones, if you like, that I like to follow.
So what have they done this month and obviously this year? Because obviously we're only 6 trading days, I think, into this year.
Yeah, so
this month, sorry.
It's not far for the month. So if you're looking at the month now, we can see healthcare takes the cake at the top. Consumer discretionary is right up there, and we know that there was some tax implications with the budget that allowed that, and then industrials, that's right up there as well. So when you see industrials moving, that always bodes well for the market. But financials, negative 3.47. So it's on the flip side of all of that. So it was saying the week up, the week down last week, and energy was with financials there. So we've seen a flip with energy. So energy was at the top of the list for the week, but the bottom of the list for the month.
Yeah, I know. I mean, a lot of people are switching around their portfolios at the moment, looking for value somewhere, because some of them are thinking, oh, this is overvalued, that's undervalued, but they are switching around.
Well, the short-term moves, like the weekly moves, really don't show you much. And so we know that in the media, they look at the daily moves a lot and the weekly moves.
Yeah.
It's not really helping people. It's the bigger picture.
Last Wednesday or Thursday
important.
when the market fell, I think it was Wednesday that fell, I was expecting calls from the media saying, hey, Dale, the market's fallen a couple of percent. Is it crashing? Because that always happens.
Yeah.
When it goes up 2%, nobody rings. But when it goes down...
Maybe they just know what you're going to say now.
Am I that predictable?
I don't know.
I don't know. Well, let's look at the year, see what's happening on the year, just to get people looking at the longer term picture. And again, you're seeing a huge different, a whole
switch
different
there,
change, isn't it?
Like Infotech's right up there. So you've sort of got the top. So if we start from industrials, consumer staples, communication services. Now, if we look at what you've said in the past, which is we're looking at the ones that have moved the most, then look at the ones that have moved the least, potentially to be the best movers for the year ahead. So energy's sort of at the bottom, utilities, financials, materials. those four might actually turn around.
Well, they're the ones we've been saying in the second
year.
half of the year they should start to do better now, obviously after the pullback from there.
Yeah.
Did you want to have a quick look at the charts before we move on?
Yeah, let's have a look at the...
I know you're the charting queen.
Yeah, consumer. Thank you. Consumer, does that make you the king?
I suppose so. Do I get a crown?
Do you want one? All right, so looking at the consumer discretionary, you can see there we're not far off the all-time high there for that that particular sector. Still further upside to go, and looking at the momentum, you know, I can see this pushing on. So discretionary looks really good. Energy really has been the laggard of the sectors lately, moving sideways, a bit like the materials sector, hasn't really outperformed lately, but I think that you know, could change down the track. We could see that flip up, but in order for that to happen, it needs to get through this 11,202 point mark, and then it's on its way again. But a move back below last month's bar, and we know that there's going to be a further move on the downside, and that could change the whole longer term picture on the energy front. So looking at the financial sector, really nice move recently, as you say, but last week we had a big sell-off. So it is really volatile and always was going to be volatile in the financial space. So we would need to see the financial sector trade back above 6,500 points to be making the move up through the all-time high. And look, I think eventually it will do that. It's just time will tell with this one. So healthcare, we always like to see healthcare moving on because it shows that the market's really healthy. We have seen a reversal when it traded to a new all-time high, and you've got to expect that to occur. So when markets break to new all-time highs, momentum often runs out and we see a bit of a breather. So at this point, nothing to be too concerned about, and we're seeing this sector push back up. I'd like to see it get back above this high here, and that was back in August 2018. So moving ahead to the next one, info technology. Steady climb it's already had. Now it's just taking a bit of a breather and moving sideways, and flip across to the weekly chart. We can see a big reversal there. So that's often a bearish sign, but stocks will often come back and test previous support, and this is what the markets do as well, and sectors, and we're seeing that happen. For now, I think it's just taking a bit of a breather, but it's a bit of a warning when you see some of these big moves up, Dale, and then a reversal happens so strong like that. So just keep an eye on that space. So then we've got the XJO. So this is the broader index. Have we got any more sectors there, Dale, or is that all you wanted to show tonight?
There's probably more, isn't there?
Materials
I think we've done
is
all the
after
broader sectors there.
So I'll just go to the materials sector there, and we can see how it's been moving up steadily to challenge that all-time high over time. Now we're actually seeing this consolidation, if you like, in the sector. So I think there is potential for further downside, short-term downside. I think more medium-term, though, we're going to see it eventually kick back up again. So that's materials and industrials. Looking at industrials, really strong. I would actually like to see this sector come back a little bit, take a bit more of a breather. So if it does that in the short term, like the materials sector and the financials, if they all come back a tick more, then we'll get that move down that we've been looking for. And then I'd like to see it head back above that 4,600 points. So that's sort of a bit of an important level for this industrial sector. And looking ahead at staples, consumer staples is a great one to always have some exposure to, or at least have a stock in this sector on your watch list, and have it part of your solid portfolio. You can see there on the weekly chart, and this is driven has been historically driven by Woolworths and Wesfarmers, and you can see that it's actually trading below that high, the recent high as well, which is great to see because it's coming back with the market. But a bit harder than I actually expected the staples to come back. So in the short term, looking to see that recover back above this high of July, because that's a pretty important level, seeing it broke above this 2018 high. And that's a really important point, that 2018 high, 8,530 points. Looking at the communications services sector, which Telstra dominates, we've said before in previous recordings. Now, the curious thing here is that there's a little gap there on the weekly chart, which, often these gaps do get filled, and that's a bit of a red flag at the moment, but it may not come back all that way. The decline so far has been quite orderly, I'd actually, looking at it, if it goes below 800 points, then I'm expecting it to come back all the way down to here. So that wouldn't be too good for Telstra, I'd say. But at the moment, it's only 3 months down. It's had a number of months up, more than double that. So you'd expect it to come back for 3 or 4 months as part of the next move up. So that's communication services. Utilities. I still like the sector at the moment. It looks interesting, and the fact that it's holding at around that 8,000 point mark, it can often be a bit more defensive when other sectors are being sold off, and then get sold off when other sectors are moving forward. So look, I haven't written it off yet, but this was a really bearish move that occurred on the downside on the weekly chart. So I'm just sort of watching it and carefully over the next coming weeks to see what happens and whether we get a move above this point here, this high of this bar, the 20th of September 2019. So that's 5,560 points. We need to see it get above that. But then it's still got some hurdles because there's a lot of resistance. And note the angle of the highs going up across here, getting higher, but sort of following a nice line. So I'm just watching to see whether this sector can push back up towards that high. So there's some interesting movements there on the sectors across the board, some more volatile than others, but that's to be expected at this time.
Well, it is, and there's somebody on the chat, and I can't remember who the name was. I was just having a quick read of the chat because we've got a lot of questions already, which is exciting to you, I know, because you like looking at the charts. But somebody was asking about, with the pullback that we're expecting, he's asking when's it going to happen? Is it going to happen before the end of the month and then be rising at the end of the month, or when's it going to happen? And this is where really it's irrelevant to you to understand that, because at the end of the day, what Janine and I say is protect your capital, protect your downside, and then take the upside and let the upside run. And a lot of people over the last few months have been saying to me, what do I do if the pullbacks is happening? Do I sell all my stocks and come back later? And I go, well, that's great, but do you know when to sell and when to buy back in again? And if you don't, then you're wasting your time, because you'll get out at the wrong time and you'll get back in at the wrong time, and you really had a nil-sum game. All you've done is give the broker a lot more money. And currently, if you watch my report from yesterday, the fall that we're expecting is probably 3 to 6% from where it is currently, or where it closed on Friday. So that's like next to nothing in the scheme of things. So really you don't need to worry about that. Don't worry about what the market's doing. Janine and I never ever make a buying decision based on what the All Ords is doing. We make the decision based on what the stock is doing. So what stocks we own or what we don't own and we're looking to buy, that always determines our decision. What we do with the All Ords is really giving us an idea of how the market may unfold into the future. Really and so if we know that, and I talked about this in detail with our traders last week, and I did the live traders forums for an hour with the diploma students and obviously advanced ones. And I was talking about how the market moves from low to high to low, and showing them where the best places are to buy, where to slow back on your buying, and where to stop buying, and where to be exiting. And just showing them in terms of pattern how to do that and how to work out when the market and stocks are telling you. They give you road signals, or they give you big stop signs and green lights.
We've been asked about, is it the start of the month, end of the month, which you can figure out if you put the time aspect of the analysis into it as well. And it just depends on what it is you're actually doing. If you're trading the index or trading something that's closely related to the market index, then you might want to be able to do that if you're trading really short term, which you can do with the price pattern and time analysis to pinpoint when the turn's more likely to occur. But like you say, if you're managing a portfolio of stocks, you don't need to know whether the turn's going to be early or later, because you're following your stocks.
Yeah, your stocks will tell you when to get in and get out of them, and that's really what it's about.
Because you can work out times, and it's uncanny how when we're looking each week at the stocks and we, I've always got the time where I think that the stock's going to turn.
Correct.
And it's just uncanny how it turns so close to those lines or right on the line.
Oh, yeah.
So that's why it's really important to have price pattern and time there. But, the type of trading that we're doing with the direct equity managed account service, we're not looking for, the pinpoint turn to be able to try to sell right on the turn. We're looking for confirmation, because the time that we think the market's going to turn is just a warning sign that everything's happening as it should be, or unfolding as it should, and then we can actually, really confidently follow through with what our rules are. So that's, to me, that just gives the trader real confidence in what they're doing.
Well, they do, and to me, it's like when I look at times like this, you really know when how do I say, when the amateurs are coming out to play, because they're constantly making the wrong decisions or the opposite decision as what they should be making. And there's an old saying that...
When you say that, how do you mean? Can you
Well, I'm
explain?
saying that the old saying is the amateurs buy at the top and sell at the bottom, where the professionals buy at the bottom and sell at the top. So the professionals are doing the opposite of what the amateurs are doing, and the amateurs think they time the market, but
so
they
that's
don't.
why you see that push up. So when you get that really big push up and then all of a sudden people get excited about that particular stock or market, when in reality that's when you should be being cautious about it.
Yeah, I was working with a trader only last week about exactly what that is. I said, don't worry about that, because what you're doing, and this really cost... Oh, sorry, this person that was dealing with me was somebody who was just coming onto our courses, and they're asking my help. And they had this trade, and I said, but you've left half your profit on the table because you've made a knee-jerk reaction to your sell. You haven't used solid rules on that. And it was a trade they took just before they joining our course. And I said, what you've done is your entry's wrong, but then you've compounded it, even though you've made money, because they were telling me how good they were in their trade. And I go, no, it was a terrible trade. You made money, but it was a terrible trade because you cost yourself some money off the bottom because you didn't get in at the wrong time. Yeah. But using the rules that we teach just in my book, they would have doubled their money on that stock.
Right.
And they cost themselves an absolute bomb by getting out way too early because they panicked because of what was going on the market, like we've seen in the last week, where the market's been a bit volatile. People go, oh, shit, I've got to get out of my shares, got to protect my capital.
So they had no rules at all?
No, they thought they had rules. And this is the thing, is that what I affectionately called delusional trading. People are deluded thinking they have rules and they know what they're doing. But then when you start asking them questions about what are they doing, they don't really know how to articulate it. Like I have so many people that I speak to on the phone, they go, yeah, I'm a trader. I go, okay, so how do you trade?
But is that because it is so grey, because they don't have any structure?
Correct, they don't have structure. They're telling me that they're a trader. They're telling me that they've traded for 3 to 10 years. And then when I say, well, how do you trade? The answer I get quite often is, ComSec. I go, that's not how you trade. That's the platform you're using. And just because you buy and sell a share doesn't make you a trader in my book. And when I say, okay, so how do you select the stocks you're going to buy? And then what triggers you buy and what triggers you sell? What rules and techniques and strategies? And then I just get this like spaghetti mixture of stuff that's just not articulated properly.
Okay, so you're saying that on one hand people are not following rules and they're really sort of skirting around the surface on things and making mistakes. And then on the other hand, when we get questions about, when's the market going to turn, we want to know, we know why people are asking that.
I understand why they're asking it.
But we know that's not important for them, but it's not easy for us to share with them exactly why that's not important, is it? Because they're coming from the point of not knowing. So how do you...
Yeah. But the thing is, they don't realise it's not that important because they don't have that strategy and process. They think understanding when the market's going to peak and trough is going to make them more money, and it's not.
Yeah, and that I find that tough actually to really convey that message to people about how important it is to ignore certain things.
Oh, I do. And there's an old saying that a wise man learns more from a dumb question than the person asking it.
Yeah, that's a good
and it really is true. And both you and me have had people in our faces at expos or wherever we've been, where they've been speaking engagements for whoever. And we get these people, and tradies know what we're talking about here, because tradies get dumb questions all the time from people asking them to do stuff. And
have you asked a dumb question?
Well, I've asked dumb questions of tradies, yes, because I'm not a tradie. But you get people asking you questions or making statements to you that you know are ill-informed. And
I like it, the fact that he's asked a dumb question, sorry.
Well, I reckon if you don't ask it, it's really dumb then, isn't it? I'd rather just keep asking questions, because the thing is, if I keep asking questions, then I find out more. And I was mentoring a young guy just recently, and I said, the best advice I ever got when I was young is to, if I was in the presence of somebody who knew more than I did and was where I wanted to be, just shut up and listen, because you can't flap your mouth and learn at the same time.
Yeah.
And that was the best advice I ever got. So when I was in front of great traders or around great traders, I was like a sponge, just sponging it up. And then I'd go and do what they do, because simply they know how to make money. And so that's what the comment was, is, that the wise person learns more from a dumb question than the person asking the question, because the person asking the question often doesn't even take the advice anyway. And that's 99% of the time. So why ask the question in the first place?
Right.
But let's go and have a look at the chat.
Okay.
So we'll get into that and have a bit of a look. I've got to put my glasses on. Here's a whole heap of stocks that you can start whacking into the thing. But as I said, we had a great question, as I said, about the market, but you don't really need to worry about where the market is heading right now. You just need to protect your capital. So we're going to go into CYBG. Now, I did do a recording on it for our students a few weeks ago because it had a huge drop in the last month. That's Clydesdale Yorkshire Bank there, and there was some things going on in the UK, but I think it's one to watch in the coming future. But this one's from Vinit. And it says, hello all, please let me know about the CYBG stock. Will it really go up due to all Brexit happening? So we'll get into all of that.
Good question.
Yeah, it is a really, really good question from that point of view. So we'll have a bit of a look at that now. We've got Cherie asking us about the banks. Now, I know the banks are always hot topic on us.
Oh,
She hasn't asked specifically about the banks, but we will talk a bit about them.
We haven't been asked by Cherie exactly what banks, so I've just picked two that I like.
Yeah, that's fine. That's fine. And then we go into, I'm just looking for a question. We've got Will saying, hi Dale and Janine, can you please get your thoughts on A2 milk? So we'll have a look at that. And then it goes, when the 50-day moving average crosses below the 200-day average, should I be concerned by this?
I was just going to ask you, is that Will from our trading group?
No,
and I just realised when the question was about moving averages that it wouldn't be.
We don't use moving averages, matey. I just don't find them as effective. But in theory, when the fast moving averages go below the slow moving averages, that's where they're telling you to sell. But I've never used a 50-day or 200-day moving average.
When I first started getting into the market, I found that so many people were teaching that. So that's one of the first things you'll learn. So to me, if people are looking at moving averages, it tells me, and please don't take offence by this, but I've been where you are, so it tells me where you're at in terms of your journey through this whole process. And mate, you've got a long way to go yet, because that is nothing compared to what you can learn.
Yeah, but it's like everybody doing all these educators, inverted commas, whatever you call them. They teach all these tools that are on a piece of software.
Well, I remember the first time I met you, you were talking to me about, because when the first time I met Dale, I was talking about moving averages. And Dale said to me,
when I stopped laughing?
Yeah.
Oh, okay.
He said, forget moving averages, use trend lines. So I almost pulled my hair out. And that's probably why he's lost a bit over the years.
I have lost a bit from doing trend lines.
Off the top. Because trend lines actually drive you crazy in the beginning when you're first learning the rules. But once you actually start to use them, you just see how powerful they are. And Dale used to say that, if it looks like a dog, then when people are applying trend lines, if it looks like a dog, then it probably is. So, it took years, didn't it, to formulate really good rules around trend lines so that people would be totally clear on what a trend line was and how to apply it, and we've continued to perfect that over time.
I've seen some interesting trend lines, and without being rude to anybody that's watching this show, I can guarantee, unless you're a student, you can't draw trend lines.
Yeah, well, you said to me that there were people who were saying they could draw trend lines.
Oh, all the time.
And I remembered that I was going to invite a guest onto one of our forums, and he reckons he knew he understood trend lines, but he'd never actually done our course.
No, he wouldn't know how to draw a trend line in his life.
Well, then he started drawing trend lines on the daily chart, and I just sort of had to stop him and say, mate, look, I think I'll do the trend line.
Did I ever tell you the story about me and I was presenting at an expo?
You presented at lots of expos.
Oh, I know that. So I was presenting at an expo, and I was talking about trend lines, and somebody in the crowd, as you always get one in the heckler. I love hecklers because they're really cool, fun to play with.
I remember when I first did a live presentation for a group, and Dale taught me about the hecklers, and the hecklers are actually your friend.
They are. I love them because they give me a place to go somewhere.
It creates such an interesting topic to go on, doesn't it?
And they get more out of you. But this heckler was saying, well, what about moving averages? And I said, what about them? And he goes, they'll beat your trend lines. I went, no, they won't. And he goes, yeah, they will. And I said, well, pick a stock. So he picked a stock, and I drew my trend lines on it. And then I said, what's your moving average? And he told me, and I put it on. And I said, I beat you here. Where's the next stock? And he went, well, I said, I'm going to stand here picking stocks until you give up. Are you giving up yet, or you want to give me another stock? And he walked away. Because I knew what we do works.
Yeah, learn trend lines over moving averages.
Works.
Forget when you start learning how to do those properly, you just forget the moving averages.
Seriously, you make far more money and you have a lot less trades. A lot less trades and make far more money. Yep. So let's go into the stocks.
CYBG.
CYBG.
Now we're looking a bit yellow here, or green.
The screen, that's right.
This is techno yellow. Looking at the monthly chart, you can see there that CYBG has seen better days. and is trading at an all-time low. Now, this doesn't mean that it can't get cheaper, because, I mean, the lowest price, I think, was $1.93. It can always go lower. However, it looks like it might be finding a little bit of support. So, say, for instance, this low here in September, if this stock continues to trade below there, then the bottom obviously is not in yet, and you'd still be counting how long that may be. Like, you know, one of the things that I would be doing if you're wanting to try to work out where the bottom of this is you bring your price pattern and time in, and you'll be able to see where the most probable point is for the turn on CYB, and it's just amazing how that works. So looking at this, I would say if we get a strong rise back above last week's bar, then that could be the low, and that might be a good sign that it could trade above this high. But if it stays down around this to the end of the week, then it's much less probable for it to take that high through. So I don't like this stock for obvious reasons. As far as the Brexit situation, did you want to comment on that?
Look, they're washing out a whole lot of stuff at this point in time, but the point is has it stopped falling? Now, if you're not in it, then you don't really care. But I'm guessing, considering they're asking, is that they obviously own it, because a lot of times when that stock's fallen... Well, it is unfortunate, and a lot of times when people do ask about a stock that's fallen heavily,
it's been
they actually own it.
Heavily, probably. Look right here.
But the point is, will it ever go back up? Yeah, it's a big bank. It's a big, and it's had a National Bank still owns it, I think, or a big chunk of it.
Oh, I'm not sure what they're...
in Australia.
Because they've floated it off, so it's...
Yeah, it was part of the National Bank group, but it's just whether it's finding support, and as you said, it really does need to find support where it is. But right now, I wouldn't own it. I wouldn't have my money near it if from that point of view. And is it going to go up? It will one day, but right now it's not looking really, really healthy. So let's have a look at the next stock, which is from Alan, which is Alumina.
Now, I'll look at the history of Alumina. To me, this is really a fascinating stock to look at. If you go right back here, you can see how volatile the history of this share has been. And look, some people who are really sceptical about technical analysis say at the start of their journey, you can't make decisions about stocks now using technical analysis, using the history, because it was a different company then, or something's changed with the company. But it doesn't really matter. I mean, I've disproven that time and time again by showing people how the price, time and pattern works in the future, and how it does influence or indicate to you when things are most likely to occur, whether there's going to be a rise or a fall. And looking at Alumina at the moment, it's got really strong support across this $2.10 to 20 mark, which I quite like. And off that high there, I'd like to see the stock get a bit more traction behind it. So once this volatility unfolds on our market, if we see the stock move through that high, that'd be a really nice move up. I just really like this stock. I think it's a good trading stock. There's some really good rules that if you know how to back test properly, you can find a really good set of rules for this share that'll keep you safe when the volatility increases, and also allow you to make a nice return. So that's Alumina. I like the stock. Like I said though, there's always an upside and a downside. So we're always looking at, the way that we trade is we say, if the stock trades through this or these, numerous things happen with price, pattern and time, then we're more likely to think that it's going to rise, and we can put a forecast on it. The analysis allows us to determine how far the stock is most likely to rise before it has its next turn. But at the same time, every stock or trade that we're looking at, we're always looking at, what's the downside, and what will it do what will it show us if it's more likely to continue to fall? Because it's almost like, a card player showing his hand, and, the stock is going to show its hand to you and tell you whether it's more likely to go up or down at any given time. So that's what we're looking at. And Alumina, being a volatile stock, is something really important when you're trading it, to be able to do both, have a view on the upside and the downside. The countless number of experts will give you one view.
They do, and they all give you like a view. Everybody's got an opinion. It's like backsides. Everybody's got one.
Yeah.
And everybody's entitled to their opinion. That's
I didn't laugh at that joke.
You didn't laugh at it. But again, it's about listening to informed opinions, and they've got to back it up with fact. Now, we're technical analysts, so we look at the charts, and some people tell us we're crazy for looking at charts. Why don't we look at the stock?
Look, I think it's becoming more accepted these days, because when you and I started, it was a voodoo. It was considered, you were weird if you looked at a chart, weren't you?
Oh, look, I even had financial planners going, when my first book came out, going, are you sure you're not getting death threats for what you were talking about in here? And I went, why?
Yeah.
And we got a comment from somebody saying, how can we give stock recommendations on YouTube? Isn't that dangerous legally? And no, it's not for us, because Janine and I are fund managers. That's what we do. We're fully licensed by ASIC. We're fully covered from that point of view. We trade tens of millions of dollars, and we've got our own AFSL license and had it for 17 years. So unlike anybody else on YouTube, we can actually do that perfectly legally, because that's what we do. And Janine and I
it's not a personal recommendation.
No, we're not giving anybody personal recommendations. So we're just giving our thoughts on stocks. It's up to you to decide whether you want to own them or you don't own them. And we constantly say to people, it's their choice.
That's what we have a disclaimer for.
Yeah, and that's also why we have a disclaimer for. But I know there are a lot of people on the web saying, this is the stocks I'm buying this month and blah, blah, blah. That's dangerous, because they're not qualified. They're not licensed by ASIC. So that is dangerous to look at those people. But we do this every single day. It's our profession.
And look, when we're talking about these stocks, I wouldn't be saying that I think you should buy it or sell it. I'm just giving my opinion and saying, look, if it was me, I wouldn't be holding this stock, or I like this stock.
Yeah, your choice. It's your choice. Let's quickly have a go at the banks, and then we'll get into some more stuff.
That's a favourite, isn't it? Looking at the stock, it's actually holding up really nicely around that $80 mark so far. Look, there's a possibility it could come back a little bit further, and so what if it does? It's gone through a period of about 3 years of doing nothing, so you'd expect that once it takes off, it's not going to do that and just continue to rise. It has done with the GFC, but look at the volatility with the fall in the GFC, and look at the gradual fall that happened. It was almost like the frog in the pot, the story about the water getting hotter and hotter. I think that's what happened here for investors, and they just kept continuing to hold, but disbelieving that Commonwealth Bank could ever fall.
But it really is due for a bit of a move, isn't it?
It's due for a move up, yeah. So looking at Commonwealth Bank on the short term, we've seen this gap filled on the weekly chart, which is nice, another one there. Big sell-off obviously last week, but it could, and as I said, it could come back further in order to be in the pluses again, or in the watch list again. It would need to go back above the week of that really volatile move last week. So just watch this space with CBA. Westpac, similar sort of thing, off the bottom. It hasn't actually come back as far as I would like to see Westpac pull back. But it has had a sideways move on the weekly chart, and you'd expect often that a stock will pull back and test those sideways consolidations, which is what it's done. Again, I didn't expect that it would come back so quickly in 1 week, but, and it could continue to fall from there, and let's hope it does.
A lot of people are more negative on the banks and not very positive, and that really goes back to what we said at the start of the show, buy in doom, sell in boom. If people think the banks are on the nose, then that's probably the time to start looking at getting into them. And I know people will disagree with us on that. Yeah. Now, we're not saying to get into the banks.
I'm not saying buy now. I wouldn't be buying now, especially with that big move down on the week.
Yeah, but it's more of, we believe these have stopped falling big time from that March, April 2015 high to their lows. We think they've had their long-term low, and they're starting to get into momentum on their next more bullish run. So,
and it depends on what your rules are, whether you do buy or not, really. And you've got to have your own rules. So that's the two banks that we like the most. That's Commonwealth and Westpac.
Well, we need to move on now.
A2 Milk, have we got time for that one?
No, that's next. Okay. After we come back from this message from our sponsor. No, we don't have any sponsor message. But it is time we get into our topic for the night, and that's learning how to double your money in the stock market. Now,
everybody wants to do that.
Well, everybody does want to do that. And so, but now one smart guy told me he could show me how to do this really easily. And then he reached into his pocket and pulled out a $50 note, folded it in half and said, "There you go, mate." Great. So, now that's one way to double your money, but I think we need to get a little bit more serious on that. Now, before we get too far into things, let's look at what the expectations are of the majority of investors and traders and what they're actually doing now. Now,
if you are one of those who visited our website and have completed the 60-second trading assessment survey on our website, you might be a little surprised to learn that 87.65%, just to be accurate, % of respondents are saying they have limited to no knowledge when it comes to trading the stock market. You might also be surprised to learn that 80.8% of respondents are saying they are either not confident or They are somewhat confident about trading, but they are still not profitable. Is that you? Now, here is where we give you some of the reality check that Dale mentioned. For most of you, you sit here watching this live show every week. Great to have you on. And as you watch, you hope to gain a little snippet of information that may improve your investing or trading results. And I try to give you a little bit more. Whereas you know, as you sit there watching, that you should be taking the bull by the horns. I'm not going to do a demonstration of that. And getting a quality education, which 88% of respondents in the survey say they are looking for. Although I did do some sort of example of that live during one presentation and nearly shocked you.
Oh, yes, you did too, didn't you?
Anyway.
But the statistics are quite profound. As I've written in my book, that 90% of traders do not make money consistently, and I'm sure many of you come across that figure elsewhere on your journeys through the web of learning to trade. So nearly 90% of you who are watching tonight will fit into these statistics.
We want to change all of that.
Yeah, well, worse is that you came to our website looking for answers and you found the answer, and yet 90% have done nothing. And so it's no wonder why most traders fail and investors get average to poor returns. Now, Janine, you and I have been teaching people to be successful traders for around 2 decades. And the reason people give for not getting the quality education they tell us that they know that they need are always the same. And the 2 excuses they give us are it's too expensive or I don't have the time.
These are just excuses, but what frustrates me is that they do not realise how much not having a quality education is costing them. So what these statistics are telling me is that they are choosing not to invest the time or money to get a good education, yet they want to know, or yet they all know that they want and know that a good education is important to be profitable. Sounds like this is an act of self-sabotage to me, Dale.
You nailed it there, didn't you? People are self-sabotaging themselves on the market all the time. They know what they want and what they need, but then they don't go and do it. And that's really what's going on. So
that's a classic thing about the start of most people's journeys, isn't it?
Yeah.
I mean, I read the Shares, what was called the Shares magazine at the time, to start off my trading, and read the Fin Review. Now, I couldn't think of a worse way to start.
Nah. And people, a
Not
lot
that
of way
the Fin
people
Review's
think there's the best
good.
way
The
to
Fin
start.
Review is good, but it's just not the way to start trading.
Well, there's one of those behavioural finance things, or what they call heuristics, in the market, and one of them is herd mentality, which a lot of people have heard about. And that's how most people start. They start exactly the same way as everybody else has.
Reading a lot of information.
But then 90% of traders fail, so why start that way?
Yeah.
And that's really what we're sort of saying here. So now, Janine, I know you love a good statistic, and I have some more for you from the latest ASX Shareholder survey.
Okay, cool.
Now, this report was completed for the ASX by Deloitte, and it was released in 2017. They do it every couple of years. And now, you know, I've done many podcasts over the years on these reports. As I said, they're done every 2 years. So I think I've done them every couple of years for like 15 years.
Yeah, thank you for that. They're really insightful as to how Australians invest and what they do. So their expectations and a whole lot, sorry about that, a whole lot more. When you read one, you realise that the statistics don't lie as you find out why so many fail or get poor returns.
Now, for those watching, just Google ASX Shareholder Survey and you can get your own copy. So that should be on your screen. And it's around 80 pages long and very insightful. Now, whilst I'm not going to go through all 80 odd pages, I will give you some of the stats in that. Now, the research conducted for the ASX indicates that Australian investors rate the returns on their investments as the most important factor when looking to invest. This is followed by wanting either a guaranteed or stable return. Now, that's not all, as investors expect these guaranteed stable returns to be in the order of 8 to 9% per annum. So hang on to your seat.
So what the research is suggesting is that investors want high returns with no risks attached, which we all know is not achievable. But it is just this type of thinking that is holding a lot of investors back from achieving the returns they say they want.
Now, the research for the ASX also demonstrate that most investors prefer to do their own homework when it comes to investing, with a considerable number relying on third-party broker reports to make their investment decisions. And yet, as we know, many are still unhappy with the returns they're achieving, and it's really well below the 8 to 9% per annum that they're asking or they're wanting.
Okay, so people want to pretty much have a guaranteed return of 8%. They do their own research, Yet, as we know, nearly 90% admit they've limited to no knowledge and they're not confident. Is this where I pretend that I'm in the movie The Castle and they tell me that they are dreaming?
They are dreaming, aren't they?
Now,
really?
Dale, I remember when you used to do that workshop every month called Seeds of Wealth.
Yeah, I used to love doing that.
And at the end, you mentioned to everyone that they had 3 choices from today, those being do nothing, do something, or to procrastinate. So which would you do? So the results of our 60-second survey in the ASX stats are saying that 90% of people do nothing or procrastinate. It's funny about that.
Well, it is funny.
The savvy ones do something, though. My question to everyone watching is, how much are you willing to invest in yourself in order to know how to be able to double your returns? We all know that doing nothing or procrastinating gets you nowhere, so it seems a little crazy to me to do that when you actually know what you need.
Well, Janine, unfortunately, too many people believe that investment in knowledge is costing them money. Now, rather, they should be looking at it in the form of perspective of how much it is costing them by not having the knowledge or education. Because education is the best investment you can make for yourself, and it's never a cost. And it's like that lady that I mentioned earlier. She made mistakes that cost her 30% on a trade by not having the education. So she realised after chatting with me that was the case. So how many more trades like that did she have, and how much was that costing her?
Probably a lot.
Well, it probably is a lot. But let's take a look at what the real cost is of not having an education in the market. Now, for those of you who have read my latest book, Accelerate Your Wealth, it's Your Money, Your Choice, you know that I show you over a 10-year trading period, also including the GFC period, and we're trading the top 20 stocks on the ASX using trend lines alone with a stop loss. So 2 very simple rules. That's it. Now, that you can achieve in that book, we showed you how to achieve 12.5% per annum.
So a $30 book will satisfy the returns of those people on the ASX survey if they follow what you teach.
Not bad, eh, for $30. Now, correct. But they do have to buy and sell shares that are not guaranteed. So that's the challenge a lot of people have.
Let's assume you invest $50,000 and make 8% like everyone wants in the ASX survey, then you have made $4,000 in the year. If you make 12.5% per annum, then your capital would have grown by $6,250 in the first year, which is $2,250 better, which is a pretty good return from a $30 book. Now, let's say you have completed the Diploma of Share Trading and Investment, and so now have the quality education and confidence to trade the market, and you're able to double your returns. Now, still, using $50,000, you could potentially make $13,000 on your $50,000 capital, or around 25%, which is very achievable. Would you now say that getting an education is expensive? I think most of you would agree that it's not.
Now, Janine, I know a lot of our students are getting those sorts of returns and higher. They're telling me they're getting higher as well, but that's what our students are getting now. But to make it even simpler, I get people saying to me that they will trade the money that they could otherwise have used for the tuition fee for the course, and then they'll pay for the course down the track with the profits that they actually make. Now,
well, what if they lose the money then?
Well, correct. Now, I know it sounds pretty weird, and I agree, but people really do say that to me. They'll say, I'll trade with little to no knowledge and see how I go. I'll experiment with my money and see how I go. So, to me, trading with little to no knowledge, what chance do you think they have of making money?
But it's often people who have knowledge in some area and are expert in some area that are their own worst enemy.
Well, I think it won't happen to me. I know you see on TV all the time, people go, I never expect this to happen to me.
Now, what I'm trying to say is they're an expert in some area that's not the market.
Oh, okay, yeah. So I think because they're an expert in one area that
they should be able to pick it up.
Yeah, I know we get a lot of people that think they are really good at buying property and investing in property, and they think they can translate that straight into the share market, but they don't follow the same rules, and then they lose, and they don't understand why. And I know that happens a hell of a lot. But what I want to do before we finish up this bit is let's get onto the ASX compound interest calculator and punch in some numbers and show people just how they can calculate things for themselves. So don't necessarily believe us. Look at this yourself. Because there are 2 things here that I'll say whilst we're bringing that up, and they are interest is dead. So if you're worrying about, if you've got interest in term deposits, bank accounts, that sort of stuff, it's dead. It's not the place.
And it's going to be dead for a long time.
And it's going to be dead for a hell of a long time. So it's not where you're going to get your returns, and especially not returns guaranteed of around 8%. Now, the second thing I want to say is paying more off your home loan is costing you bucket loads, because you could be doing better with your money by putting it into the stock market and investing. But maybe that's a subject for another show that we're going to do.
We could expand on that one, couldn't we?
Yeah, we can expand on it. I think it's probably a good idea. We do actually have a bit of a look at it. So, but let's look at the compound interest calculator. So on the screen, you can see that right now. Now, we've put in here, if you look at here, we just put a deposit of $10,000, which is nearly the same price as our course, okay? So people say to me, I'm going to trade that and see what I get. And if I make some money, then I'll do that. Now, as you can see, we have no deposits coming into it and we're compounding it annually over 10 years. And so here's 5%. So you made $16,289 over 10 years. Now, if you type in 10%, now it goes to $25,937. So if you're making more than what most people are getting on the ASX at the moment, based on their research and their survey, you're getting 25,000 now.
And it's not much more, is it? Like it's only a couple of percent more. It's like your book, How to Beat the Managed Funds by 20%.
Yeah,
it can make a big difference over
time. It makes a huge difference. So let's double that now to 20%, which is easy to get. Because remember, we show people how to get, just with a couple of simple rules in the book, we show them how to get 12.5%.
62,000.
62,000. Now, let's say you spend the whole first year, let's put 9 in here, just studying, not investing in the market. So now we do it over 9 years, not 10. So you spend the whole year studying with us in our course, and then you start trading in year 2. You still nearly double your money.
Now, what I'd like to do is put in what the current interest rate is that a lot of people are getting on their over 10 years. Okay, so people are making, that's in reality what people are making.
Yeah.
Over 10 years.
About 2.5% in the bank. That's what their guaranteed returns. And just by going into going into some good stocks and just trading them actively, not necessarily being a full-on day trade or really heavily trading, you're still going to do better. And this is what people don't look at, is what is not having that education, what's it costing them money. And you can see if you're getting 8% and we teach you how to make 16, which is easy for us to teach you how to do that, your course is going to be paid really quickly, and then you're going to make a lot of money from the compounding effect.
But even a lot of our students decide to go on after they've done the diploma and either do the advanced course or they do the CFD Forex course. And there's a lot of them that have gone on and done CFDs that are using that to make.
They make even more money. But I'm just keeping it really, really simple tonight. It's really about what are you doing now. Now we have interest-free loans and all that sort of stuff that people can use and keep their $10,000 and trade that, and they'd still be miles better off. You know, that's what I'm saying.
So it's a no-brainer when you think of it that way.
Yeah, but people make excuses because, and the reason why it's fear. Because it's not a guaranteed return.
But why wouldn't you? If you could get it interest-free to do that and start today, why wouldn't you?
Correct. I'm saying that's what I'm saying. I said, why wouldn't you do that?
I paid my money up front for all of mine courses when I learnt. So
did I.
And that was a long time ago. And then, I don't know. But to me, it's a no-brainer. Well, that's interesting. And I believe it was Einstein who famously said, education is the progressive realisation of our ignorance. Now, I'm sure those watching are now less ignorant after seeing that. Look, I'm just being blunt here, okay, but tongue-in-cheek there. I'm also sure that they are now starting to realise that ignorance is far more expensive than gaining a quality education. Now, I've been ignorant in the past. It's about coming forward to the front and actually just, being real about what it is you need. So for the 90% of you who we know from our survey want a good education but are not getting it, what if you could achieve your goal of double-digit returns without dramatically increasing your risk? How would that make you feel, and how would that change your life? That's what's really important here, and that's what's at stake. Now, I think it is time we got back into the chat, shall we? Yeah. We've talked a lot about this tonight, and hopefully we've got our message across, and that that you do something positive for yourself.
Yeah, and the thing is, we're just interested in helping people make more money, and that's really what
we want to change the statistics, because the statistics across the market for people who fail are poor. Like, it's really bad long term.
And you don't need to.
People, it doesn't need to be that way. And, the history, the GFC showed people a lot of things, but unfortunately the GFC hasn't taught people lessons because people are still repeating the same mistakes and buying and holding and doing all of that, waiting for the next decline.
So let's get into, where were we up to? Let's get into Callum. He was asking about BET.
Okay.
So we've got Callum.
So BET, what did he give any background as to why he was
looking
looking at that one?
Well, if I go back onto it.
Okay, so Callum, has Callum been on our site before? BET, I've got that one. Is that the only one we've got?
Yeah, well, they've got, after that BET, we've got A2 Milk from Will.
A2M,
So
we
have a
already
look at
loaded
that.
that one up, so that's
Yep.
already there.
And then
next,
Galaxy for Eddie. So they're the next three we've
Galaxy,
got. So
there it is.
Yep, Callum said, hey, could you look at BET
Okay.
stock for me? I
You
bought
guys are
before they
lucky.
signed a major
Got in
deal.
early.
Yep.
So A2 Milk, first of all. A2 Milk, look, it has been sold off, and I'm glad that we exited out of that one some time ago. So use rules to trade this one nicely. Now, if you had our rules on this, you would have been out already. There would have been numerous signals to get out of it. If you're looking to get into it, it's going to be some time before the stock's likely to trigger that. Now, we know what's been happening with A2M and the whole takeover with Bellamy's and the Chinese company. So that's what's put a bit of uncertainty into A2 Milk. Look, if I was looking at it, I'd have it on my watch list still. It's going to present good opportunities down the track, but right now it doesn't look great. Now, BET, BetMakers Technology Group, looking at that, it's taken off. You can see here that it got sold down quite heavily. Now, what's interesting is understanding the history of it. It's not so much, even if you're in the stock now and you're excited about it, what's important is the volatility, because this level of gains can be wiped out pretty quickly with a decline. Now, you'll notice that the stock fell 94%, so it had only been listed on the market for a very short period of time. There would have been people who were thinking, oh, this stock's awesome, look, it's risen. Now, let's have a look at how far it rose from the day it came into the market, somewhere around there, to over, now I can't see that, I'll just have to drag it across to the left if I can grab that. That's not going to allow me to do it. We need a new pilot here, Dale.
Oh, what are you doing?
I'm trying to see what that percentage is, but look,
7,095%.
looking at it quickly, it's probably more than doubled, right? So in terms of that initial 12 months, say, to 2 years, and then it's fallen almost 100% of what it was in those gains. But looking at it now, if you're in it, then congratulations, you'd be holding onto it, but you'd really want to have some great solid rules for this particular stock. I think it has a potential to get to around this 33, 36 cent mark, but in the short term it's going to be volatile. Now, Galaxy Resources got sold off really strongly. Looking at that from the all-time high, it's currently down around 78%. Now, similar sort of thing to the last stock I talked about. These more volatile stocks, they are going to have periods where there will be big sell-offs, and so therefore, having fallen so dramatically as part of this move down, you'd be questioning why you're still holding it if you were, because there were so many rules that would have allowed you to get out of it. I mean, looking at the top here, just the Dale's book, How to Beat the Managed Funds and Accelerate Your Wealth, would have given you the rules to exit this stock long before, somewhere around in here in February 2018.
He says he bought it at $3, thinking to add more at current level, wanting it long-term hold for 5 years.
Yeah, but why would you even think that way about a share?
Correct.
I mean, you don't just put your money into a stock and think, I'm going to buy and hold this for 5 years. I mean, it's just
Especially
not
not a stock
strategy.
like this. It's very cyclical. If you did that
Definitely
5
not a
years
stock
ago,
like
you'd be
that.
no money.
I mean, it's one thing to pick a stock like a bank that's going to pay you a dividend with the franking, and to think that way from a buy and holder's perspective, but
Not
like
a
Dale
resource
said,
stock.
this is not a stock, not a mining stock that's on the lower end of the scale, especially.
And I would also add to a stock you're losing money on. That's just compounding it.
Yeah.
Because you're now down, if you bought it at $3, it's down below $1, so you're down 70%, so why add to more?
Yeah, the funny thing is that if say for instance, the corner shop, right? You know how corner shops went out of business? So if someone bought into a corner shop years and years ago and someone offered you to buy another corner shop when their shop had already halved in value, would you go and buy another corner shop when the shops were going out of phase? I mean, this stock could go off. I've seen stocks go off the board completely after they've fallen dramatically like this. So it's not to say that this stock will recover. You just don't know with these types of shares whether that's actually going to happen.
Well, this stock has to go up more than 300% before you break even. So, and is it likely to do that over the next few years? It might. But you're living in hope, and it's that whole...
So it's having a plan, isn't it?
Yeah, well, it is, and it's a lot of people, and I'm not saying anything about this, whoever it is, Eddie, from there, but a lot of people, they trade on the buy and pray method. They pray it goes up.
Well, this is historically how people have bought shares, thinking this, and it's not Eddie's fault. Like, I mean, we've all done things like this. We first looked at the market and bought particular shares.
I've lost 100% on a stock, done that.
Yeah, look,
Don't do it again.
And that's one of the reasons why we're actually trying to help you to get on the different path. So I think it's an expensive lesson. The thing is with this particular share is that it's not going to just recover all that way anytime soon, I think.
All right, so we got to speed up because we got a lot of stuff to do
Okay,
here.
so what's next?
We've got CDA by David, and then we'll do Santos for S. Anthony. No.
So someone's got the whip out, have they?
Yeah, that's me.
CDA?
Yep, and CDA Santos,
Santos
and INR. I don't like S32. If that's for S. Anthony, I don't like it at the moment. It's going down.
S32?
Yeah. No, we're not going to cover that.
Okay, what else? What was the other one?
Because INR for
INR?
Sam, I believe.
INR, so it's Ioneer or something limited. These are all these are small stocks except for Santos, aren't they?
Yes, correct.
Okay, so we're looking at CDA, Codan. Okay, so I'm just going to have a look at the volume on this particular stock if we've got that there. Because it's always, even though we don't use volume to trade, unless we're doing really short-term trading or looking for a particular signal out of a pattern to see that momentum's behind it. I mean, you can see here, the reason I wanted to have a look at this is because the volume does fluctuate on the smaller stocks quite a lot. And you can see the illiquidity of this share with so many bars trading at the same price action, one after the other.
Quite liquid, isn't it?
Yeah, but then you look at the volumes increased. So, it's showing you what happens.
Well, that shows you that the amateurs are buying at the top.
Yeah, because it's not huge amounts of money we're talking about here, right? So compared to some of the bigger stocks on our market. So, look, I would say, if I was in this stock, I would be running with it, and I'd be looking to take some profits once good solid rules are triggered. But I may not use a trend line on this particular stock because it may be suited to a different rule, which is in the course as well.
Santos is
so
nice.
Santos looks interesting, doesn't it? Looks great. It's just come back to test that sideways move. Huge support across this level about 720, 730. More medium term, it's bullish given that it's been up recently in September. So it took out those previous highs in 2018 and April 2019. This is, one of our favourite stocks, Santos. So looking at that, if there's a gap on the monthly, so it's more likely to rise towards $9 or $10, I think, steady as she goes.
Quite nice.
Now, the only short-term concern is this gap still on the weekly chart down here, but it appears to have actually broken that momentum of any selling that occurred back in, just get my cursor over there, August 2019. So looking for a rise back above this high here in week ending the 4th of October 2019, and it'll be on its way again. So that's Santos. Now, S32
we're not
you said no.
Go to the next one.
Ioneer. Now we're looking at the sell-off. What's interesting about
Another
this
illiquid
share,
stock.
and look at this. We can see here, if I put the crosshairs on there, you can see that it's almost traded up a similar number of months as it has fallen. If it was to continue to fall, it would almost be like an A shape, isn't it? And you do see that on some more volatile stocks where they almost trade up and then eventually the decline ends up being roughly the same amount of time on the way down.
Yep.
But it looks like it shorter term weekly, and you can see the illiquidity of it, that it may actually be finding support. Now, it would need to trade back above that 21 cent mark to actually confirm that it's on its way again. Otherwise, the real risk is that it could just keep falling and come all the way back down to below 10 cents.
Yep. Okay.
Never say a stock can't get cheaper when you're talking about small stocks.
Most
okay,
definitely.
so how are we going?
There's a couple more. You can plug them in. We've got a couple of other questions. But before I go into those couple of questions, if you haven't liked the show tonight, just click that little button down the bottom there. Click the like button. And I know that about over 50% of people who watch the show live and in the recording aren't subscribed to their channel. So we need your support. We'd love to have your support. So click subscribe to the channel. It costs you absolutely nothing to do, and it takes you only 2 seconds to do, but it really does help a lot. Helps our channel a lot and helps a lot of people find who we are and what we're actually doing. So I'd love you to do that. So hit the like, hit subscribe and do that. Now, the question I've got is from Craig. He said, hi Dale and Janine, would like your thoughts on the strategy of getting out of a stock based on 2 bearish signs on the weekly chart, where one is due to the whole of market downturn like last week. Now, my answer to that is not good enough. 2 bearish signs in 1 week doesn't tell you to sell, and especially given it's a reaction to a market, that's not. And what is the bearish sign? Because a lot of people say to me, actually I had somebody say to me today on YouTube saying there's a doji, and I went, and as soon as I read that, not being rude to the person, I went, yeah, big deal. But people think because they see a doji or a candlestick reversal that the market's going to turn around and melt down, or it's going to go the other way, and it's not. Candlesticks are like very short term, and that's all they are. And a lot of people don't understand that dojis in certain places have more strength than dojis in other places. And so this is that whole stuff about that lack of education. That person might have bought in to that stock too early, seeing a doji. And sometimes when you see people asking about, here's this rule that's broken on the weekly chart, and we go, well, why would you buy that there, or why would you sell that there? Because we're using a lot more rules and a lot more knowledge and a lot more confidence in what we're actually doing. And so that's where we're getting better runs. And so we position trade, so we run the trade all the way to the end, from the start to the finish. Now, we're not buying at the top and selling at the bottom, and we're not buying right at the very bottom and selling at the very top. We're taking the big safe chunk in the middle and let our profits run. But let's get into this stock, which only is, what are we looking at?
Emeco Holdings,
who was that by?
EHL. That was by Jack. Okay, thanks very much, Jack. And we're looking at a stock that was in its heyday, up around $12, and is now trading at $1.90 or thereabouts. Now, that really puts things in perspective, in my opinion, and think about this when you're trading the lower end of the market. So looking at EHL, you can see it appears to be finding support now. But this recent move down on the market actually pushed it below the 30th of August 2019. So, while it may have been finding support here the first week of September, now we're seeing a real test of the support, because it just goes across the chart. It's not just at that point. We can see, and this is why it's really important to look at the monthly chart, because if you're just trading short term and you're looking at this, then you really have blinkers on. So you're not seeing the strength of this level. Now, if that level was broken, well, it could be heading all the way back to below $1, similar to that other stock we looked at in terms of back below an important level. So, but at the moment, it might find support, and if it happened to trade above this level around here, this 213, then it would really start to look interesting again.
We've had a lot of new interesting stocks, haven't we, that we don't
normally get from viewers.
I love seeing these stocks.
This one's interesting. SVY, now Stavey Minerals Limited. Now this is, obviously there's been an announcement here that the stock's rocketed up. So whoever's typed this in, you might want to also type in what the announcement was. Now this is patchy as anything. In terms of the liquidity, it's all over the place. So it actually is an example of, you could make some really nice money, but it's a needle in a haystack question.
You've got to get in and get out.
And looking at this, you can just have a look at how far it fell when it did fall. So, if you bought and held, you would have been had to grin and bear it for a while, because you would have been down about 60-odd%. This doesn't happen with a lot of stocks. The opposite happens with a lot of these smaller stocks. So I'm just looking at, one that has actually gone up. So this is what sucks people in.
It does.
When they see stocks like this and they think, I'm just going to find that little minnow myself that's going to just skyrocket. And I remember thinking this way too when I started out, and then realising that, you can find stocks that can give much more consistent returns if you're actually smarter about it, and forgetting the one-off that you might have put. Say you've got a portfolio of 100,000 and you had 10,000 position size, you might have thought, okay, this is more volatile. I'm not sure if I really want to put my money in it, because you've heard announcements about it or something. And I'm speaking from, historical experience here. And say you put half of that in, 5,000. Well, then you have to sort of start to question yourself, why am I putting any money in at all if I wasn't willing to put the full position in based on a proper design of my portfolio? Well, the reason is because most of these penny dreadfuls, if you like, end up dreadful.
That's why they call them penny dreadfuls.
Correct. But this one turned out to be a good one. That could be 1 out of 20.
Yeah, but if you trade, I was talking to one of our students who missed a trade on, I think it was New Farm the other week, that shot off like a rocket. And a lot of our students
got into it. That's not a penny dreadful, though.
No. But a lot of our students got into it and they got the run. He'd missed it because he didn't see it.
Okay.
And he was sort of kicking himself. I missed it. I didn't get into it. How do I find stocks like this? I want to find stocks like this. And I just said, trade well.
Well, all he has to do is look at the top 100 or top 200.
Correct. If he follows does his trading well and follows the rules, those stocks come up. Like the other students got in and made the money really quickly.
Yeah.
I think it was in a matter of 4 or 5 weeks of owning it, they made a lot of money. And so that's what I was saying to him. If you trade well and you've got good rules and good strategies, those stocks will just keep popping up. From time to time, you'll get one that'll run 100-300% on you over a period of weeks and or months, and you'll get it, but you'll get it safer, because you're going to get these wrong more times than you're going to get it right.
And you can't get good rules on this sort of stuff.
No, they're very hard to
problem.
get.
So you can't back test this and have any sort of confidence on it at all. It's just sort of like, lick the finger, test the wind.
Well, I was with an analyst one day, an industry analyst, and they said they'd done the research on these sorts of stocks. And they said you have less than 1% chance of making it on these stocks.
Okay.
And so
that tells
I already knew I shouldn't be trading them, and I wasn't at the time, obviously. But yeah, so the research it's very hard to make stocks on this.
So did you ever trade some of these?
No, I did bought a couple of tech stocks back in the early 2000s, and that's one of the ones I lost my money on. So, actually, I've only had one stock I've lost all my money on. That was one of them. I can't even remember the name of it. It's wiped from my memory. I deleted the memory bank. I don't do that again.
Yeah, look, I think that's good because some people just hang on to them, which is not a...
Yeah, I think at the time I had a lot of people in my ear going, you're trading all the boring stuff. And it's like, yeah, BHP is
actually,
boring.
that I had someone actually tell me that recently, someone who was looking to do one of our courses tell me that he'd been told that you should trade some of these other stocks. So he went and listened, and then he ended up buying 3 or 4 positions. And the good stocks that he was actually that he actually happened to have in his portfolio, the returns that he made on those got wiped out by those crappy ones. So I think out of those 3 or 4 stocks, I think one did okay, but the other ones just went like a lead sinker down.
Yeah, well, I know during the tech boom and bust, all the people that were trading those techie stocks all got wiped out, and I'm still here. I was the one making money because I was trading better stocks and not getting sucked into that.
Yeah, you always liked big stocks, didn't you?
I always liked the big stocks, your News Corps, your banks, your BHPs, your Rios, all of those sorts of things. So I was making, and I ended up making a lot more money than they did, even though they thought I was the crazy one because they're saying, old economy is boring. And I went, well, you can go and trade what you like and take the high risk.
So you're saying be boring, it's better?
Boring. Making money is boring.
Is that a new slogan?
Be boring, it's better. Yeah, making money is boring. If you get it right, it's boring. You make money. But I think we've come to the end of the show, haven't we?
We have.
Otherwise, we'll get yelled at by our producer from that anyway. So, but I hope you've enjoyed tonight's show, and really, thanks very much for participating. And sorry we didn't get to all your questions. I know there's been a bucket load of questions on the show, but yeah, I did stop you.
I would have kept going.
Yeah, you would have kept going. So, but as I said a little bit earlier, if you'd like to see the show grow, then remember, hit that like button, share it on your social media, and please subscribe to the channel. As I said, it costs you nothing, takes you a few seconds, and it really does help the channel grow and helps us and helps other people like you find the channel so we can help more people. So we like to share it because the more we can do, the more you will learn. And we've bought a new camera for tonight, so hopefully it looks good. I know Janine always looks good.
Thank you.
Hopefully I look a little bit better. And somebody asked me if I'd been in the sun while I was away, and yes, I was on a tropical island, 30 degrees, and I got a little sunburn.
You got a bit of a suntan?
I got a little bit of a suntan, yes. So, but anyway.
Also, make sure you put this show into your calendar so that you're back online next Tuesday at 7 p.m. If you cannot be with us live next week, we're always happy to receive your questions, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Okay, well, that does bring us to the end of the show, so we really hope you enjoyed it, as I've mentioned. And I know I've enjoyed it, and I know you've enjoyed bringing it to you. So, but as always, thanks for taking part, and we'll see you again next Tuesday at 7 p.m. So for now, goodbye, good luck, and good trading.
Good night, everyone.